Morning, everybody. Hi. Welcome to the Bernstein Strategic Decisions Conference. We're very happy today to have Brett Biggs join us for a second showing at the conference. Of course, he's the master of ceremonies and the CFO for Walmart Inc., the big boss job. And I've known Brett for a long time, have immense respect for him and the work that he and his team do all the time. Obviously, Walmart has done an incredible job now, and we're very happy to have them here as the country goes through such a difficult time. Of course, as usual, we do want to make the disclosure that there are going to be forward-looking statements contained in this presentation that many times there will be phrases that will refer to events for which we are making guesses. One of the components that I think we're going to do is I'll flash the screen up in just a second, but be sure to realize that as you're in the pigeonhole questions, please don't try to reach for those extra components that, Walmart doesn't disclose. This is a strategic decisions conference, and so we're interested in those larger strategy issues and not focused so much on the ticky-tacky of the dynamics of arrangement details. And so with that, I'd like to move on to a couple of opening questions for Brett. The first thing that we wanted to start with was, something kind of simple, but I think very profound. We've certainly seen this incredible growth in the grocery business. It's been a necessity for the marketplace. It's been a necessity for people just to keep themselves running. But I always think that, Ferner and Doug were general merchandise folks by training, and their background. And, every time I would hear Doug speak and Ferner, when we worked with him in China, he would not forget that it's general merchandise shop as well. What opportunity do you guys see in that space? We often hear about the mixed conversation, so I'd love to just hear how you guys think about the general merchandise opportunity now or in the future.
Yeah, you bet. Thanks, Brent. Thanks for having us. Appreciate it. So this is round 2 for us at your conference, so a little different than last year, to say the least.
Yeah.
As you mentioned, Doug and Doug and John both kind of came up through that part of the business, and it's still a big part of our business. When you look at food and consumables in the U.S., over 55% or so would be food and consumables, but there's a big general merchandise business, and it's certainly that way in the e-commerce side. So it's a big part of our mix, and you saw some of that in the first quarter. As we went through the quarter, in the mid part of March or late part of March, we became pretty much a grocery and consumables company. And then as the stimulus checks came in mid-April, reverted back to more of a normal mix, although even more to the general merchandise side. So as we go forward and you see the work that we've done on attracting more brands to the sites, what we're doing in marketplace, the things that we're trying to do with brands in stores, private label, which has become a bigger part of our business. We're very much focused on that general merchandise business. One, you need that from an assortment standpoint for the customer to be relevant on everything else that you want to sell. But then, as you mentioned, mix is a big part of the financials that we put out and the results that we need to have. Having that GM in there is important.
Yeah, and one follow-up on that. When we talk about e-commerce, one of the stories had been because click and collect had gone so well on grocery that we saw more general merchandise, quote, items enter that basket. I know people still say the app's not entirely merged. Okay, fine. But we certainly see some of that product shifting over. Has that adoption rate in terms of baskets beginning to look maybe a little bit more like an old school Supercenter basket start to show up a little bit?
Yeah, part of that has been us being able to get the assortment. Let's talk about online grocery. Started out being called online grocery is really a lot more than grocery. We had a fairly limited mix of general merchandise now. It's not exactly the entire Supercenter, but it's much closer to that than it was. And over, let's say the next year or two, I think almost everything in the Supercenter you'll be able to put in that online, what we call online grocery basket. So that's important. But as we get people coming into the store doing pickup, there's a big part of general merchandise that's a part of that. The merging of the apps, as you mentioned, the blue and the orange app is really important to the experience for the customer. And I've used it recently, and I do see the difference that it can make in getting general merchandise, making it easier to get general merchandise into the basket.
Yeah, that seems right. As some of the stores and arguably some of the logistics hubs were getting closer to their operational speed limits, is there a sense that I'm trying to frame this the right way. What are some of the learnings you had, or that are at least early senses of where those choke points might be, right? Because suddenly the stores are clearly being both logistics hubs and service because they were one of the essential services still open. And we know that Tesco years ago had kind of pulled a lot of that pick entirely out of stores because they were physically more constrained and they just didn't have that room to do that. Did you guys hit that point, where you're like, there's just too many people in the store at this point, not just because of COVID, but because of the physical difficulties of logistics of a pick process and customer shopping?
Yeah, we tested a lot of things over the last several weeks that we weren't anticipating testing necessarily. Certainly about how to get people through an online channel and to get them through the stores as well. We were, even before COVID, go back to last year, as we had online grocery stores that were starting to hit their fourth year, we were starting to learn, where those, choke points might be. And so as a customer, if you think about the customer that's in the store, you got to make sure you're not causing them a problem. As you have pickers in the stores, that people that are coming in the stores can actually get around like they want to. So we had a lot of technology driving that, become more efficient at picking, different time slots. We're having people come in, so that again gives us more, in effect, more picking capacity. So there are a lot of things that we're already working on that, the experience with COVID we'll get additional learnings, accelerated learnings coming out of that. And even, as you know, we had ship from stores. So we had about 100 stores, give or take, where we could ship items from stores to customers' homes. We hadn't used it a lot, but we accelerated over 1,000 in a matter of weeks, and we'll have over 2,000 that are capable of doing that. So it's just having the flexibility to kind of do what we need to do, when we need to do it, and, having the capital do it, financial strength, obviously we have to go do that. But then also, Brandon, you know this company well. I've been here 20 years. The ability of this company to move with speed is remarkable. I quit saying amazed. I'm not amazed by it anymore, but it's remarkable to have a $500 billion company that can move as quickly as we can and, when we need to.
Yeah, that's powerful. One of the things that, we had some investor interest on this on omnichannel. I didn't see it as much as a change as I think maybe some of the investors did, which is with Jet.com kind of turned off as a brand, not turned off as an operation or as a team, et cetera, or as a capability, but as a brand. Does that really just mean that Walmart can be an urban hipster brand and the rich elites are okay shopping at Walmart, and we don't have to worry about that old notion of, can Walmart hit the promise of being good enough for everybody but not too good for anyone?
Yeah, and the brand, there may be still some things that we do with the brand. It's amazing how sticky the Walmart brand is, and we found that by acquiring Jet. It's almost 4 years ago, and as we started utilizing Jet for different things, we kept finding out that the Walmart brand was really, really strong with consumers. And when you look at our customer base versus and lay it against the demographics of the U.S., it's actually strikingly similar. Yeah. So we do appeal to every demographic, and particularly now when you look at the price has always been important. We've been a winner on that for years. We've always been big in assortment. We're getting even better in assortment. Convenience is the one area, go back 5 years ago, that people could have argued maybe Walmart's not convenient enough. I think that's not true anymore. With online, with stores, with everything that we can do for customers, pick up delivery, we are convenient. So when you put all those things together, whether you're lower income, middle income, higher income, I think we've got what you want. Even items now that 3 years ago, as a customer and as an executive, I would have thought, I don't know if we'll have that online. We do have it online. And so if I can do that and get the right price, why would you not go to Walmart.com?
Yeah. Yeah. I mean, we've always been believers that the ability to be a price and convenience location for some and a price and assortment location for others is one of the unique attributes that Walmart can provide. And, that's true. When I say unique, I mean genuinely unique. A handful of companies around the world can even aspire to that model. And then, I have been impressed that some of the service components that normally might be a little bit of a reach, people are signing up for it. And I mean, we talked before about how some of the service in the stores, period, has just gotten much better. Electronics, especially compared to the old days, where it was like, even with as many incentives as a Walmart associate had to go to electronics, they would find themselves going to a competitor because the service just wasn't there. And now that's not. It's just not the case. So it's really quite an improvement. I want to turn a little bit to international. Again, I know it's not a huge thing for that, but the demand shocks in other markets, those may be places with less stimulus. They may have less opportunity than we've seen in terms of the kind of sustained small businesses. Should we worry about, a V-shaped recovery in the U.S. and something sadder, a less effective letter elsewhere in the world?
Yeah, I think it's going to be, and it's hard to look at international as international because every market is so different. And even within the U.S., I think as you talk about, V-shape, U-shape, swoosh shape, whatever shape you want to think about, we're going to see that in different parts of the U.S. even.
Yeah.
But as you look internationally, as you mentioned, we're seeing some of the same challenges we have in the U.S., which is channel shift, mix shift, demand cycles, very quick demand cycles. Canada will look a lot more like the U.S. Mm-hmm. Typically, Mexico, amazing business at Walmex, just continues to do incredibly well. But like you said, every country's got a different pattern of stimulus. You're seeing more stimulus in Canada than you will right now in South Africa, for instance. And so we'll have to work our way through that and are working our way through that. But we'll have to continue that. It's going to continue probably for the rest of the year, trying to work our way through some of those things.
Yeah. I think the one that, we got questions on were kind of, I'll call it Flipkart. So thus far, again, you got to look at the numbers for yourself. It doesn't look like India's had as bad of a disaster as people had thought. But at the same time, the construct of this dynamic is just as important in India as it is everywhere else. And so, kind of had the sense that maybe that's even a tailwind for Flipkart the way it is for others. You have kind of a sense of where you guys are on that. I mean, it's early days.
Yeah, it's early, and Flipkart for us obviously is a really long-term investment. Yeah. Go back to the end of March through really most of April, Flipkart was effectively kind of shut down because of government regulations. The country was really on a lockdown for about 3 weeks, and then there was just some slow reopening different parts of the red, orange, green zones and all that in India. We're starting to get back to a little bit more normal operations there. And, like with every other country, I think, India will go through a different cycle. They were pretty early to shut the country down. Mm-hmm. And so we'll see how that plays out. But, that's a great business for us. And I think will continue to be for a long time.
Yeah. No, and if we have more time, we definitely would chat about some of the payments business you guys have there. I think it's exciting.
Yeah, PhonePe. Yeah, that's great.
There's just so much. I mean, we've had entire conversations with clients just about the payments business now because that's just such a remarkable growth. The other thing is China at some point a similar, I'll call it differentiated bet in the way that we've seen kind of a big amount of capital go to Flipkart? I mean, obviously nobody forgets that it's on the board, but then, should we, when we're thinking about, okay, listen, Walmart's going to have to pony up some more capital to China. I don't know when, but it's going to have to come someday, somewhere.
Yes, I mean, it's already a big business. I mean, India, we had a very, very small business. So China, we've grown more organically and have a big supercenter business. Sam's Club's doing incredibly well there. Yeah. We continue to grow through the Sam's Club channel. So I think in ways we've made big bets. We did a partnership with JD.com. We own around 10% of that company, which has been a nice investment for us. Mm-hmm. So we've made some pretty big bets in China. They've just been more gradual over time versus the big investment that we made at one time into India.
Makes sense. On Sam's, is there another market that you guys think could be a China? Because you're right, China's been awesome for Sam's. I mean, it's half the reason why I can take a swing at Costco every now and again. Because you guys are doing so well in China. But is there another market for Sam's that you feel is that way? I mean, Mexico's already been great. Lots of places.
Yeah, I mean, what's worked in China is it appeals to middle, higher income, which is emerging quite a bit in China. So it appeals to that income demographic. Mexico plays a little bit of a different role, but as you said, it's been a great format for us there. Obviously, a great format in the U.S. Adding different, retail brick and mortar formats going forward is probably going to be less prevalent than we would have had in the past as a company. Just given where retail is going, you'll see more investment going into maintaining our existing fleet and growing our e-commerce business. But it's where we've got Sam's. It's fantastic.
When thinking about that, as you guys go internationally, one of the things that we found is how big city matters so much differently in terms of how you serve that than anything else. And the U.S. frankly doesn't have that many big cities, not certainly by global definition. But most of the rest of the population, most of the rest of the world is densifying and at crazy levels relative to U.S. experience. Does that lead to that notion that, on top of the idea that there's a price, assortment, and service offering that can hit the right component if you can take just enough convenience, is there a sense that there is kind of an urban way of doing things and a suburban way of doing things, and that maybe the global battle is more about that urban way of doing things?
I think that, there's certainly an element of truth to that. I mean, the U.S. is, we have big cities. They're different big cities. You have Dallas-Fort Worth, which has probably 8 million people, but it's spread out of, east to west almost 100 miles. It's very different than 8 million people in a city in Japan or in China, just the way it's constructed. So even in Dallas-Fort Worth, there's an urban part of Dallas-Fort Worth, and there's kind of a big suburban part of Dallas-Fort Worth, just to use that as an example. And our formats work incredibly well in the U.S. Having now e-commerce where you can more easily deal with last mile in big cities. And then we're, great, obviously, in suburban and more rural areas. It's going to be interesting, I think, how, we definitely were seeing urbanization in the globe until the last 8 weeks. Mm-hmm. It's going to be interesting coming out of this, how people, does that trend continue, or do we stay a little more suburban, rural than we were heading coming into COVID? But I think no matter how that trends, again, with what we've done in e-commerce and the size of the e-commerce business we have and the stores, but the ability to pull that together in an omni-channel solution is something really globally no one's done. And we said, Brandon, go back 4 or 5 years ago, we were saying, we think omni, this is the way to go, and no one's really done this, so there's not a playbook. We're writing the playbook as we go.
Right.
Those investments have paid off a ton in the last 10 weeks. Mm-hmm. And, trends are going to accelerate. Trends that are already happening come into this COVID time period are going to accelerate. And the investments we made the last 4 or 5 years are I feel, the right investments. Yeah. So I like our strategy going forward.
Yeah, I think that's pretty clear. When we think about that kind of longer run strategy, if we think about threats maybe to that, what seems to be a pretty good path to success over the next 5 years, that's an open space. Let me just suggest one for us, which is, do we think that the EDLC, EDLP loop is still working? Because e-commerce seems to take so much capital, right? And I know some of that's just observability, right? You push in the capital, you got to wait for the utilization curve in order for that EDLC, EDLP thing to work. But with stores, the unit economics were just so incredible that you'd be like, oh, great, these are awesome. This is a 5% higher store in McAlester, Oklahoma. Nobody's ever going to do that again. And so with DC, they're like, oh, man, that's a lot of money in the ground. And so, that's, my worry is, does that loop still work? But there may be another threat that I'm not seeing that you guys worry about a little bit more.
No, I think you described that pretty well. It's, capital is really different. If you go back to 2013, 14, 15, more than half our capital is new stores. This year it'll be less than 20%, and most of that's in Mexico and China. So it's, the use of capital's changed a lot. It's, getting your associates more efficient in the tools that we're giving them, making it easier for customers in the stores, making it more enjoyable in the stores. That's now where the capital is going. And I think that'll continue. Technology, of course, that'll continue, will continue for a while. But, I think for me, the biggest the biggest risk for us, and I usually answer this question this way, is just speed.
Yeah.
How quickly can we get, there's no end necessarily to this strategy, to this omni strategy, but how quickly do we get to where, not some of the time or most of the time, but all of the time that we are top of mind with customers across the United States and across the markets that we're in. We're really, really high on that list. Yeah. With a lot of customers, we are number one. We want to be number one with all consumers.
Right.
And I think speed and moving rapidly toward that, whether it's getting the brands that we want in stores and online, we've made great progress for that. Getting the capacity on our fulfillment centers and distribution centers that we want, again, we've made great progress toward that.
Yep.
And balancing all that out with the returns and the financial results that shareholders expect, and I think we've done a pretty good job of that. That's what we're trying to do. But I think if you ask Doug the same question, he would probably give the same answer. It's just, we just have to keep moving really quickly to solve problems.
Yeah. Yeah, I think that makes a lot of sense. And I will say, from a perspective of that, it's been amazing how much evolution has happened. But, if I go back to my own experience in that, getting everybody to get on board with the omnichannel process was a while, right? It was a while because go back 2005, 2006, there's strategy components we were working on that were anticipating this universe. Probably too early, of course, to anticipate the universe. But it did take a while to get going. Now, as Doug did, and as you guys have accomplished, it's been incredible speed in the last couple of years, right? And that's, I think, made up a lot of the gap. But I think that's probably the right identification of the issue.
It's interesting. To your point, we were slower than we should have been on e-commerce and on realizing that, there were years, I remember talking to investors, go back 5, 6, 7 years ago, and when I would say that supercenters are going to be an asset, you got strange looks.
Yeah.
And supercenters are a big asset for us. And the supercenter will change, it'll evolve, but having that space that close to customers is going to be a big part of what we do. I've gone back and asked executives from the past about the time when we went into groceries.
Right.
And exactly. A lot of the things that you hear are the same things that we went through in the last several years around stores and e-commerce that, back then groceries, they weren't fighting general merchandise. It was complementary. Exactly. And now e-commerce and stores are complementary as well. We have to remember that.
Right. Yeah, no, Division 1 and Division 27 used to feel quite a heck of a football team. And the same thing happened at early phase of .com. I remember how many times my favorite way to figure out where the wind was blowing was whether or not the pickup for online was in the front of the store or the back of the store, right? Am I going to force you to walk through the store because the store is the business, or do I want to make it more convenient for you because the consumer is the business? And again, I think that's solved really well. The other one that I think has caused people to doubt a little bit, maybe it's not the EDLC loop, but just, headwinds. It's just wage increases. So, hats off to you guys for making the right moves to help everyone doing this incredible work with extra risk, get a little bit more. One of the things though that I think people are thinking about is arguably, and this is, a little bit more my personal view, I think you could say that the value for work society is given to what we realize our essential worker society function has been a little bit arbitrarily low for maybe too long. I'm not smart enough to know the way that you do that without disrupting the function of the capitalist system, but we understand there might be some version of a living wage push. And how do you guys think about that? Even though I think you guys led that charge to get wages back up, maybe it still isn't high enough, and kind of a sense of where your guys' head is on terms of the potential that maybe long run pressures of income inequality just are going to push wages higher.
Yeah, I want to start answering that question with you started there with our associates, which it's hard to even find the right word for what I've seen when I've gone into stores with the work our associates are performing, the attitudes that they have. I think so many of them, feel like, and they rightly should, that they're serving their communities. They're helping people keep moving in this difficult time. And that's exactly what they're doing. And so what they've done is amazing. And deciding to do the one-time bonuses, the 2 rounds of one-time bonuses in the U.S. We've done other things internationally, and then pulling forward the bonus in the first quarter was that was an easy decision. It felt really, really good to do that and to honor them. Wages is a lot of things that go into determining what wages should be, the market you're in, and the work that's being performed. As you mentioned, going back to 2015, we raised wages, from, in the 7s as a facility starting rate, or 9 as facility starting rate. We were 7-ish in minimum wage, and then went up to $11 over the last couple of years. Definitely the right thing to do for associates. And there's different costs of living, different parts of the country, so it's hard to look at with one basket. We've got to be competitive in markets, or people won't work for you. And so we've got to make sure that we're paying a competitive wage in each market that we're in. And over time, we'll just have to continue to evolve again with where the market goes, and what we're doing as a company. All of that goes into that wage discussion. But we're being very strategic about it. There are as we get places in the country where, wages are increasing, it's getting more competitive. Certainly we're addressing those things to ensure that we can get the associates that we need into the stores and be able to keep them as well.
Yeah. There's been a lot about this. If the unemployment program was richer than wages in some markets, if the states had relatively generous unemployment benefits, that people won't come back to work. Where are you guys on that as a component? I mean, you've hired a lot of people. Other large players have hired a lot of people. I assume you've been able to meet the demand because you see the people in the stores and you see them adding all of the protection measures and making sure they're guarding people coming in line, et cetera. So I assume that hasn't been the barrier yet, that you haven't hit that point that you can't find labor at a fair wage. There's a concern.
Yeah, I read the same thing as you do. I mean, about that dynamic, and so that will play itself out, how it ends up playing itself out. But clearly, we've hired more than 250,000 people just in a matter of weeks into, fulfillment centers and stores and distribution centers. And I think for the most part, people want to work. They want to contribute. And I think in a time like this, people want to be a part of the solution to what's going on in the world. And I think they feel a sense of that. So that's my take on it.
That makes a lot of sense. I have a couple more that I want to run through, but I just want to remind everybody that on Pigeonhole, we do have questions, and we have several in there that can be seen. Just submit and vote for those so that I can share some of those with Brett. One of the other things is tariffs. So we kind of thought that risk was gone. Rhetoric's gotten scarier, frankly, and I think we start putting it back on the table. We certainly had seen some of the move out of China underway for the retail industry broadly. I know that a long time ago we'd advocated being less exposed to China on a resource base, and that's why you guys have dozens of offices around the world. Target does, and everybody else does too. But how do you guys balance, as other global companies must, the sense of kind of a home country bias, but also caring very much about servicing and being a part of the Chinese economy? Is that hard? Is it still fine? Is it still just kind of like, okay, there's some fighting happening in between Washington and Beijing, but we can stay centered? Just would love any color on that.
Yeah, we've talked about before. Even in the U.S., still a large majority of our goods are purchased here. And then, once you get to the smaller part that's not purchased here, there's a part of that obviously it's in China, and they're a big trading partner for the country as well as for Walmart. It takes a long time for supply chains to move because you just got to have the manufacturing base and the labor base in the country to make that happen. 18 months ago, it seemed like all we were talking about was tariffs. Mm-hmm. And so I think, as those discussions started taking place 18 months ago, a lot of companies started looking for, different places to source. And I'm sure some of that has continued over the last several months. Our merchants are they're so good at what they do, and there's such, you got to look at price and assortment, where it's coming from, and cost, and all the things that they look at with our suppliers, and they're great at dealing with that. And even as we went through, list 1, list 2, list 3 with the tariffs over that period of time, they managed it in a way that was pretty seamless for our customers, which is, the main thing that we want to do. And so, we'll continue to work our way through that, whatever it ends up being, just like we always have.
Yeah. One of the things that's come up as a kind of a subversion of that is that we've heard from some retailers that they've had a harder time getting a hold of PPE or hand sanitizer or other components because the dependency on the China supply chain for a lot of that, for good historical reasons, because it was that, I'll call it semi-complex manufacturing, right? It wasn't super simple injection plastic molding, but it wasn't also kind of a higher order Japan or Germany manufacturing. Has that happened for you guys? Have you guys been able to, it looks like you get a hold of what you need to get a hold of, but have you had that, like you had to go someplace different because, China couldn't do it anymore because the demand was, or the availability of supply wasn't there?
Yeah, our team, our what we call asset protection teams, as well as our executive teams, particularly in Walmart US, were really early on ensuring that we had, what we needed, and we're starting to get what we needed for PPE, for masks, for plexiglass, and all the things that we had. They were early into trying to secure that for the company. So, nothing right now goes without challenge.
Sure.
But I think we were pretty successful in getting what we needed for associates, for our customers.
Yeah, no, it's remarkable, and you can just see who moved earlier. And our simple test is we take someone's hand sanitizer and we see essentially, is it actually hand sanitizer, or is it just some ethanol that smells like someone was drinking too much on the weekend, right? And you can just see like who's sourced on time and who essentially consists of.
I didn't know you were doing that research.
We've spent a lot of time looking at PPE without the whiskey drink. But I'll tell you why. This reopening component, think about what we heard from Target yesterday from Brian Cornell. We want to be the safest store to shop in America. It's becoming arguably, this is a little dramatic, but PPE or safety is kind of like a human right? And so that notion of going, what is sufficient in order for people to want to shop again? And so there's a whole set of folks who didn't go through the essential transition you guys already did. Well, they're going to have to do it. And so all of those dynamics have become quite remarkable.
Yeah, we were pretty early to meet our customers into the stores. The evolution of masks and just the advice, we and others were getting from various agencies went through its evolution, and we're following everything we need to in the States, but trying to stay ahead of that and just, knowing what makes customers and associates feel safe. That's really important. And to your point, I think it's going to continue to be important for a while. Who knows how long? But if your customers and associates don't feel safe in your stores, they're going to find somewhere else to go, and we want to make sure people feel safe.
Yeah, I don't want to go too far down the tangent, but just because it was my job a long time ago to write the SARS 1.0 defense plan, which had a whole set of operation things, which actually kind of looked quite complex. So I feel relatively proud of it. One of the other components was there was a dynamic of if you actually had to have, I'll call it a clean part of the store and a dirty part of the store. So you might receive, and that's the dirty part of the store, and then you would treat stuff either with hydrogen peroxide or ozone, and you have the clean part of the store. Have you guys had a place where, was there a sense, or has there been a notion that maybe there's even there is more evolution to happen in the way that the store is run, even though today's really good, that maybe this isn't the final way to make, the system as safe as can be? We're learning things every day.
This again, there's no playbook for this. There were SARS and H1N1.
It wasn't right.
What's that?
I wrote you one, but it wasn't quite right.
It wasn't. There's no playbook for this one. So we're learning as we go, and like we do, we'll respond to what the customer wants, what we need to do, what's the right thing to do, what our associates want. It's got to be all of that coming together to help us write that playbook.
Yep, that's right. And to be fair, what's fascinating with this one is because it's high infectious still terrifyingly high fatality rate, but lower than what people were imagining, right? At the time, the notion of what SARS 1.0 or Ebola was essentially super high mortality, but slower infection rate. And so you're right, this was not contemplated well, but by probably a handful of people in epidemiology. Private label has been awesome. You mentioned it before. Mostly when other companies do this, they do it for margin enhancement. You guys have a complex role. It doesn't mean that there's a good margin in private label. There is. But, sometimes people will go, well, you have to do that to defend Aldi, or you have to do that to be, have an opening price point that keeps your lower income customer engaged. How do you guys think about the private label role?
Yeah, it's evolved a lot over the last several years, and we've put a lot of resources, a lot of people against it. And, when I used to go early in my career to the UK, and I'd see, 50% private label in a lot of places in Europe, I never thought the US would ever get anything close to that, because growing up as a kid, I remember private label being generic. It was not good product, and the US will never do this. Now, I still don't think as a country we get to 50%. I think this is still a very brand focused customer in the US, but it's more prevalent than I would have thought even 10 years ago, and Aldi and Lidl have done a really nice job with that. The lessons we learned in the UK in particular is you don't compete with an opening price point quality. You've got to compete with a mid-tier quality on private label. But we've taken that fast food. Great Value is one of the biggest brands in the world, not just for us in general. And then we've taken that, we've gone from 21 private labels at Sam's Club, basically to one.
Yep.
We've evolved on the general merchandise side with Mainstay and other things that we're doing on that side of the business. So it creates loyalty as well with customers. There is that margin mix, and that's important, but it creates a loyalty with customers that we're seeing. And, it's kind of another arrow in the quiver of how you address customer need.
Yeah, I think that's right. I think that, and we think you guys fit the quality point really well on private label. And we've even seen those variations where you'll have an eco-friendly private label, you'll have a true opening price point that kind of looks like the old one, and then you'll have what we think of as an Aldi killer, like, yep, that's really good. It's got the right quality spec, the right component.
Some of the things we're doing with market side and just really good product.
Yeah, that's exactly there. And one of the things that we always heard is Kroger had done a very good job with private label, and they had that same aspiration, which is you almost are proud to have bought it and be like, listen, I'm going to convince you. Try the Kroger Traditions, pizza sauce. It's exceptional. And I think you guys are getting to that point. So yeah. Just two more quickly, and then I'll go to some audience things. I'm curious about the sale of Voodoo, and I'm not after any commentary you guys haven't made from there. But one of the things that is a criticism we sometimes hear is that technology comes inside of Walmart, has a harder time getting seed and going, and then kind of going someplace else. And that's not a perfect example for it, even because the whole business moved from where the original Voodoo business case was. But I do kind of want the more general question of, do you think that Walmart's made moves to where entrepreneurs can really come and start showing their vision inside of Walmart, as opposed to, it's a place they would make you nervous about taking their baby and helping it use the scale?
Yeah, a lot of times what you'll see, when we make an acquisition, is it really just integrates into Walmart. And, there are times where you have a technology that, a technology or brand that you buy, and it Bonobos will be an example where, Bonobos is basically still Bonobos today. Right. And there's places where you acquire something like a shoes.com that really brought all that assortment onto Walmart.com. And it makes sense to integrate what we've done with those two businesses. Things that we've done in store number 8, delivery into the home, delivery into the fridge, is the early testing and the early pilots that we've been doing there came from here. Right. That was some folks we brought into the company, and so that's evolved and flourished. We do need things that we can do at scale. That's important for the company. There's only so many smaller things you can do. You really need to be able to scale things up to make sense. when I look at what we've done with store number 8, some of the technology you've seen with Scan and Go that have worked, and Sam's work at Walmart US, it's a different use inside of Walmart US. It's really exciting what we've done, and I think this is a place that if you're a technologist, and now with Suresh as our CTO, our new CTO, your products and your ideas can flourish here, and actually you can scale them in a way that maybe you can't do on your own.
Yeah, I think it's powerful. A couple of quick ones, which is what I'm looking off to the left. So first is, could you please talk about the entry of Facebook into the Indian retail market through an investment in Reliance Industries? Game changer, or just, everybody's going to show up there one day?
Yeah, India's competitive. We knew that. Reliance has been a competitor for years. I mean, I've been going to India personally since 2004 as we started looking at our initial foray into there. So it's been competitive. Reliance, Amazon. So, when you have 1.3 billion people, that's going to attract a lot of investment. It's a lot of the reason why we went there. So, it's not surprising.
Right. I think that's right. Another one is, what is the biggest opportunity you see arising from the pandemic? So, is there a place where there's extra CapEx dollars that you're more likely to spend as a result of 2020?
Yeah, it's, we make decisions all the time, and choices, trade-offs, and there's different elements that go into that calculus. This is a big one. This is going to change, how consumers shop. I think that story's still to be written. How much do consumers change? So, clearly e-commerce is it was already accelerating. That probably accelerates another level. And so as we look at how do you fulfill that need, will we have more fulfillment space than we would have had otherwise? Probably. I don't think it's dramatically different because we had already been adding fulfillment space.
Absolutely.
There are different ways that you'll use your stores, more delivery, more pickup than in the past, probably. But again, we were heading in that direction.
Yep.
So I don't see massive changes in how we would spend capital because everything we were doing was already heading in that direction. It's not like we have to stop and start.
Yep.
So it'll accelerate some things, but I don't think it'll be dramatically different.
Yep. I'll ask a selfish follow-up on that, which is, we've seen some of those smaller pickup points be tested in Chicago and other places, and, we're curious if, because you have really good density in lots of places, but maybe not all the density you want in all of the places, is that still a possibility? Are those still thoughts that are on the table, or is it sort of like, these are our supercenter boxes, and we're just going to figure out how to make them all run everything?
I think things, there's so many things that are still on the table, and addressing, continuing to more efficiently address the urban customer is important. That's like you said, there's a large part of the population that we have. The great thing is we have businesses, whether it's in London, Shanghai, Shenzhen, Tokyo, we have businesses that have massive density. So we know how to do those things. It's a little different in the U.S. But we've got to find things that we can scale. Having, one-off type of pickup facility in Chicago isn't going to make as much sense. But, now what we can do with supercenters, what we can do with e-commerce home delivery, Sam's Club home delivery, I don't think there's a customer set we can't address and aren't addressing.
Got it. Do you see the opportunity as, some people have framed this as a market share gain for mom and pops because they just couldn't do the things in omnichannel that have been done. But do you think you're also kind of gaining better than fair share even against some of the larger competitors?
Can you repeat? I'm sorry, Brian, I didn't quite.
There's an argument that mom and pops haven't been able to do anything on omnichannel for obvious reasons, low capital, can't do websites, on so forth. But the notion is, do you think you're just winning against the weakest of the players, or that there's actually places where you're actually taking share against some of your stronger competitors?
Yeah, you have to do both. And on the small business, the mom and pop, what's interesting is that where those kind of businesses are thriving, I mean, there's a lot of them in Bentonville, Arkansas, and there's businesses that are thriving here. But on marketplace, our marketplace business in the first quarter grew faster than our e-commerce business.
Yeah.
And so we're getting more and more sellers onto that platform. And what we're doing with Walmart Fulfillment Services, we're making it easier for them to get on and sell their goods. They don't have to develop all the infrastructure. We have that. And we're doing some of the same things in India and other places like that. So I think there's a way for the small business to win in this as well. You know, I certainly think we're going to be one of the big winners in retail today for a long, long time. And to do that, I mean, you've got to beat the best of the best.
Yeah.
And, you know, we know who those major competitors are. And, you know, I feel good about our strategy and our offerings, you know, going forward.
A couple of rapid fire ones. That I think this one's, you've answered this before, but I'll say it anyway, which is, you know, how do you guys think about the profitability path for e-commerce? Our revenue's awesome. You know, and you're going to keep accelerating it. It looks to us like that profitability is improving, maybe from not a great level to an improving level, but, you know, love any color on that kind of path towards accelerating profitability.
Yeah, you know, we came into the year saying we thought e-commerce losses would shrink in the U.S. They did in the first quarter. And everything that we've been saying needed to happen, it's starting to happen. You've got to leverage fixed in a better way, and we're seeing that happen. You know, once you get the technology in, the FC and the people in, an e-commerce business actually, once it gets started, will lever even more quickly than a store business. It just takes a while to get there. Contributing profit margin, contribution margin is really, really important. And with the mix of business that we're seeing, we're getting more brands in home and apparel and higher margin business. We're seeing that contribution margin move up. And once it gets to a point, again, it levers a lot more quickly. So the underlying things that need to happen for us to get to profitability in e-commerce, it's happening.
Yeah.
It's not happening as fast as we would like.
Right.
You know, has it been slower than we thought? Yes. But I'm seeing a lot of positive things.
Yeah. And, you know, we said this before. One of the things for me that hold the vision is right out of the gate 4 or 5 years ago when you did your first drive-through click and collect in Bentonville, you know, I saw my favorite basket, which was a kayak and some snacks for the float trip. And as soon as you get that available, and again, you may order the kayak the day before, right? And it comes overnight and ships on the truck. But when that basket happens, no one's going to ask about e-commerce profitability. It's going to be rock solid. Two quick ones, and then I have a unifying question that we're asking everybody. Are we entering a period of inflation or deflation with regards to food? And I know that's just kind of a guesswork. And then is that different than a general merchandise?
You know, we were starting to see a little bit of inflation as we came into, you know, early March. The lack of inflation to some degree was helped by us. What we had done in pricing over the last 3 or 4 years, particularly on the food side. And so we were keeping inflation lower maybe than it would have been normally, and our price gaps are very, very good versus competitors. You know, people have been predicting inflation for a long time, and they've been predicting higher interest rates for a long time, and it hasn't happened. So I'm not an economist. You know, one would think with the stimulus money that you've seen that you would start seeing some inflation, and we will in pockets. It'll be by different categories, but I think we're just going to have to be prepared for whatever comes at us.
Hey, I know I got a Chicago banner behind me, but maybe modern monetary theory is going to work. I don't know. Maybe. I'll ask my unified question. As you think through and beyond the pandemic, how do you expect your priorities to shift, especially as they relate to cutting costs or increasing levels of investment?
Yeah, I think it's and we've already talked about that, you know, as we released earnings in Q1. There are things that we've seen work with customers, whether it was before COVID or during this period of time, that we're going to lean in, and we're going to lean in hard. Yeah. That we think will benefit us competitively in the long term. And then there's places that we look at now and say, okay, the world's going to change a little bit. I don't know why we need to keep doing X. And we're going to go after that in a smart way. We're going to work differently. Everybody's going to work differently than they did in the past. And that's going to change, you know, a lot of things about, I think, where and how you spend money. And we'll be taking those opportunities.
Okay. I think that takes us to our time. I did get a note from my legal people that I have to formally show the screen of forward-looking statements. Okay. It's long and it's under the traditional safe harbor.
And it's on our website too.
And it's on the website too. And it's, Section 21E, if you haven't read it in a while, it's really fascinating reading. So
I'll read it tonight.
Yeah, exactly. I'll put myself to sleep. Well, it's always a pleasure, Brett. I'm glad to see you. I know we're not that far away, but it's still, Till next time we'll figure out a way to do this back in person again as everybody cracks this thing. All right. Thanks for your time and
thanks for everybody's interest in Walmart. I appreciate it.
All right. Very well.
Thank you.